Welcome back to another episode of Palisade Radio. This is your host, Collin. We're recording this on Thursday, April 23rd. I've got David Skarica, a good friend of mine, on the line. He's the publisher of addictedtoprofits.net. Dave's a favorite guest of the show. Welcome back.
Yeah, thanks for having me. And I don't know, does the date matter? Because when you're on lockdown, every day is kind of the same, right?
Yeah, it's starting to feel that way. No question. Well,
yeah.
At least for these crazy markets, it matters just for a reference point, which is probably a good place to start. What's your feeling, just overall feeling? What's got you excited at the moment?
Well, there were two key dates, in my opinion. About a month ago, the Fed basically said they're going to print unlimited money and bail everybody out. And that was when gold kind of came off its lows after the liquidation or a sell-off phase. And then actually yesterday, which would have been, I guess, we're talking about the date, like the 22nd, I noticed a lot of the junior stocks, which I own a lot of them, really started to break out and come out of their bases or, like sell off or I don't know, bases or sell-offs or whatever they were. And I think this is like really key. I think now you're seeing people accepting the fact that gold is going to be in a major bull market. I think even Bank of America predicted like 3,000 gold. And actually their comment was, by the way, Collin, even the Fed can't print gold. Well, no shit, right? Like it's something that we've known for the last 20 years or 15 years or however long we've been doing this. And it's just like, I think now you're really seeing the tide turn where actually the gold stocks are leading the way. Sure, the market's off its lows, but they're actually doing the best and they're going to continue to be strong.
Yeah, no, for sure. I don't know if you happen to catch the couple of charts that we put out on Palisades.ca today, but we put out a 1-year chart of the venture, and it is a pretty extreme move up for the juniors that started a couple weeks ago. But then if you put it in the context of the last 15 years, the blip that we've seen is like you can't even register it on the chart. It's pretty exciting to think about how much further we have to go. This is nothing.
Yeah, and if you look at like the small cap sector or people who invest in like speculative investments, it's like they were in, I don't know, the crypto or cannabis, and none of these people have really experienced bull market in junior stocks. And by the way, the best junior bull market I ever saw, as I'm a little older than you, was 94 to 97 when Bre-X and Diamond Fields and all that stuff happened. Even 2002 to 2007 or 09 to 11 were not nearly as strong. So with no other game in town, I think that the juniors are going to track that speculative money and actually regular money because I think after the stock market rally like plays out, you're going to see like gold and precious metals kind of be the only game in town.
Hey, well, there's a interesting title for the interview today, so thanks for that. Let's talk a little bit about how to capitalize best off of the move coming up. We were actually joking about these synthetic 2 and 3x ETFs that are out there. I know you're going to talk about JNUG, but I read yesterday that a lot of people are buying this oil stock USO in the Robinhood accounts, and probably a bit of a misunderstanding on that how that actually works. So a lot of people.
See, the way that USO works is they actually own the futures, right? They don't just own, the actual price of oil. So that's the problem with it. It's not tracking that oil. And then the problem is so when the oil went to negative $30 or whatever it was the other day, that was just somebody like liquidating, right? But the problem was they own the June contract, the July contract, and then they sell off. So USO finally rallied today. But yesterday when oil was up, USO was down because all the future contracts are down. So people have to understand when these comes to these commodity ETFs, and because commodities trade on futures, they're not just owning the spot price, they're owning the futures. So that makes them very difficult to trade. And if you really want to buy oil right now, just buy an oil stock and a major oil stock, Exxon, Suncor, something like that, right? So, and I tell people, so in terms of gold, like JNUG, they had to turn from a 3X, ETF to a 2X ETF because the 3X ETF wasn't working properly. That there was probably something wrong with the derivative or the computer program or whatever. So you just And Collin does junior mining stocks for a living. He puts together deals. I buy them for a living. But I rather buy them because I know what the intrinsic value is going to be. It's not based off some algorithm or something that's failing, et cetera. I think that's really what you want to be in. And these stocks are still cheap because they need liquidity. So when everything tanked last month, they all got sold off. Now they're coming back a bit. But if gold goes to 2000s, it's actually going to be profitable again to look for gold, mine gold, drill for it, et cetera. And if there's, quote unquote, no other game in town, they're going to attract a lot of capital as well. And I think the stocks will do like very well going forward. I'm older, like I said, I'm older than Collin. I'm 42. He's 30 or 29 or 30. And the thing is, I've been waiting for this for like 20 years. That's why I got into gold, thinking that the whole economy was a bubble, it was going to collapse. I didn't think it would take a pandemic to do it, but that's what's happened. And that gold would be kind of like the leading sector.
Yeah, no, it's been a long wait, but talk to us about where you see things going. If you have gold as the only game in town, you have people, Bank of America, for example, starting to talk about it, but it's a very uncrowded trade. Hardly anybody owns gold. Nobody owns junior gold stocks. So how does that all play out?
I think one of the examples of how retail people aren't in is actually silver. The gold to silver ratio is still over 100. Silver is still pretty cheap. And retail people tend to buy silver over gold because it's cheaper, right? If you're some guy, you can't maybe who doesn't have a lot of money, you actually might not be able to afford gold for $1,700, $1,800 an ounce, but you can buy an ounce of silver. So the fact that silver is so low means, and I know if you try to buy some silver coins, there's no way you're getting them for $15, $16, right? But I mean, in terms of like the actual stock, I think that's a sign that retail people actually aren't involved. And I don't my business is picking up, but I don't get a slew of people saying, hey man, I want to get into precious metals. And when I see that is when, obviously you're going to be like further on in the bull market. So I think for the easiest thing for the retail person is to buy right now with the juniors. I like stocks that have either ounces in the ground or a near-term production or have big land holdings. You don't need to buy the early stage, we're picking rock samples up with our hands because that stuff will do well like later. But I think right now you want real assets, near-term production, or ounces in the ground. And by the way, because all the majors cut back on their exploration budgets, which is prudent during low gold prices, they're going to look at these companies as takeover targets as well, right? So I think those kind of more matured juniors is what you want.
David, do you think there's an actual systematic, let's call it, shortage of gold reserves and discoveries in the industry? Meaning, is there any chance we just have a 2016 knee-jerk reaction to low prices and gold stocks stop going up? Or is this a thing that actually needs money thrown at it to be solved?
No, it needs money because you look at, again, it's like the polar opposite what just happened in oil, right? What happened in oil was there was so much of it, somebody was just willing to actually give you the oil because they got to get rid of it because they can't store it, et cetera. But in gold, it's the opposite. It's if everyone took delivery on the physical, gold would probably just pop 20% overnight because that's what you would actually have to pay to get the delivery for the physical. So I think the gold industry actually needs supply, and especially with a lot of these mines because of COVID being shut down right now. They can't have miners working close together. That even adds to kind of the supply discrepancy. So I think that gold and silver actually have supply issues. And the problem is you just don't know how long the paper market can kind of control it. But, as a trader, it's actually okay because you can still kind of get into these things while you're getting a relatively a cheap price. But I do think there's a big supply issue with gold and silver. And remember, gold and silver, I know they're used in electronics, they have industrial uses, et cetera, but it's always the investment demand that drives those two.
Yeah. No, that's a very, very good point. Look, let's switch over to the Dow. You've been very vocal the last few years on ahead of a crash, the need to have insurance and, to put shorts on, especially ones that could play out in a very asymmetric way. We've now had a crash, but we've had a retracement of 50%. And you've got serious unemployment, serious issues, and yet the stock market seems to not be showing it.
I think because all the liquidity they're throwing at it. The Fed is printing trillions of dollars. They're bailing everybody out. I've never seen anything like this, by the way. Like, I even just read an article right before we came on air that, now all the frackers, they want to bail out too. And by the way, what they're going to do with the frackers is they're going to put duties and taxes on Russian, Saudi Arabian oil to keep those guys in business, even though it's a totally uneconomic model. And it has been, by the way, for years and years and years. So I think that's what's going on with the markets. They're kind of ignoring what's going on in the real economy because of all the liquidity. But at some point, and I think it's more likely in the fall, maybe in the summer, you're going to see the market roll over because people are going to say, hey, the market right now is still trading at 130% of GDP, which other than 2000 would be all-time high, even after the decline. So it's so overvalued, but all the liquidity is kind of held it up. And by the way, it's very a thin rally too. It's like Netflix, Amazon, Apple. People are just going into these stocks that they think aren't hit, by Corona. And I think what's going to happen is, especially if you get a disruption in supply chains, which I think is going to happen, I think that again, those companies are going to have to move production back to the States or to higher cost jurisdictions. And that's going to lead to issues with their supply and profits in the short term. Those companies will be hit. And by the way, when the economy finally opens up again, when this ends in the next 6 to 12 months, who the hell is going to want to watch Netflix? Everyone's going to binge watch it. Everyone's going to cancel the subscription. They want to go outside. They're going to see everything they can see. So actually these stocks that are holding up in a lot of ways are going to be great shorts once everything kind of opens up.
So with all that liquidity coming in, keeping the market lifted, what's going to change that dynamic? Because it seems like the amount of stimulus, the amount of money printing is, in fact, staying quite steady, maybe going to increase. Is there a point, though, where that no longer keeps the market at elevated levels?
I think a lot of people are delusional and they think they're going to be like a V bottom in the economy, right? When this ends, people will go out again, they'll spend money. But you can't spend money if you don't have a job, right? A lot of restaurants are going to hire, if they don't go out of business, a quarter of the people they used to hire. So I think that when it's obvious that the economy is not coming back to where it was, that's when you see the next swing lower. But also, by the way, so I think both the deflationists and hyperinflationists will be right, both of them. You'll have a deflationary bust for the next 6 to 12 months because people would sell their cars, houses, whatever they can get because they're essentially broke, especially because they don't have jobs, they don't have money. And then after that, all the central banks will say they're going to go even as crazy they are now, they're going to go even crazier, printing money, bailing everybody out, because they know they can't have deflation for a long period of time. So it's kind of this weird equilibrium right now where I think we're going to have deflation the next 6 to 12 months, but after that we'll have inflation, and the supply chains will be a big part of that. People will cut back on oil supply, oil production, and then even if the economy is, again, running at 50% of what it was at the peak, with no supply, these prices will spike. And that's everything. That's just oil. That's meat. That's pork. That's basic things that we take for granted day to day. So I think we'll have this deflationary bust, and then after that, big inflation because of the problem in supply chains.
Well, David, thank you so much for coming back on the program. We had you on last week, and always love getting you on and hearing your thoughts as the market develops. For everybody listening, David is the publisher of addicted2profits.net. Visit his site, and he's got some great content that he's putting out. We'll have you back on soon.
Yeah, thanks for having me on.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?